Keith, I'm going to give it to you first.
All right, Keith.
Thank you, guys. Keith Weiss from Morgan Stanley. Great presentation. A lot of really interesting and dynamic stuff going on at Intuit right now. I want to ask you about ARPC and pricing, because it seems like the onus on growth is shifting more and more to ARPC, and probably the biggest investor concern is, has Intuit pulled too hard on the pricing lever? We've seen price increases roll through. Can you talk to us about how you get comfortable that you're not going to lose that edge you've had in the market of being a lower price vendor, of being a high value vendor from that perspective? And can we continue to depend on ARPC on a go-forward basis to be that core driver of growth going forward?
Yeah, great. Thank you for the question. Let me start, and please, Sandeep, jump in. So I would say first and foremost, our obsessive focus is about customer growth. That has absolutely not changed, and that is critical across our entire franchise. I would say the second thing is, if you look at Intuit today versus the Intuit of 3 years ago, 2 years ago, 5 years ago, we have bolstered innovation across the entire platform, and we've now gone to the assisted market and up market. And so the majority of our ARPC growth is actually from being able to serve the assisted consumer market, which is far higher ARPC, to be able to go up market and mid market, which is far higher ARPC. MailChimp, by the way, is much higher ARPC, and then the services that we have. And if you think about where we were 5 years ago and where we are today, the services that we have across the board. By the way, if you look at Credit Karma, the opportunity that we have because of Lightbox in terms of deeper penetration with credit cards, personal loans, auto loans, when you look across QuickBooks, time tracking, payments, payroll, and now MailChimp. And then when you look at TurboTax with not only assisted, which I think Mark did a great job of just sharing, you'd have to squint your eyes to see our penetration, which just presents the opportunity. Now with business tax, this is all ARPC play. And it's not from a lack of focus on new customers. If you were in our business reviews, the insane focus that we have on new customer growth has unchanged. It's just now we have an enormous opportunity to both grow with new customers and ARPC. Last thing that I would say is Intuit has been built on disrupting from the bottom. And if you just look at our latest even announcement with QuickBooks Money, it is really to continue to disrupt from the bottom. It is non-subscription based to be able to bring solopreneurs and entrepreneurs into our franchise. And then we monetize based on payments, and eventually we'll grow them into the larger QuickBooks platform. That's just an illustrative example of our focus on new customer growth is completely unchanged. We just have a huge opportunity now to be able to do both, grow customers and grow ARPC. And last thing I would say, I promise this is the last thing, and then you can jump in, is we have a framework that we use in the company that is a management tool. We talk about it with our leaders. We talk about it with the board, which is it's about volume, mix, and price. And we have a framework where we want to make sure that the price is the smallest driver of growth in our entire portfolio. We look at it at the aggregate level. We look at it at the segment level. And it continues to be the smallest driver of growth for the company. And that is an expectation I have and you should have going forward.
And Keith, what I would add to that is our teams are constantly looking at the competitive dynamics and seeing what innovation we're adding into the product. Our customers no longer, and Mariana touched on some of this, they don't have to go to those point solutions anymore. We're baking that innovation into our product. So we look at what's the value that we're delivering through the product. We're constantly testing in the marketplace. And one of the things that we do when we implement price changing is we have a dashboard to say, what is an acceptable level of impact? In my 8 years here, we've been surprised to the upside in terms of how the customer reaction has been. All that is a very quantitative way of addressing your question in terms of what's the customer reaction to our price increase. The value proposition resonates with them, so they understand that we're pricing for the value that we're delivering in our product.
Here, Alex.
Hey guys, really incredible presentation. Alex Zukin with Wolfe Research. I want to ask a question about Live, because it occurs to me that, and you pointed this out, Live stands to benefit almost the most from Gen AI, which is sort of ironic given the, Assist is more autonomous. But I want to ask specifically kind of a three-part question. A, if I look at TurboTax Live, it grew 17%. What percentage of the growth of the tax business is going to come from live versus not live? And then expanding that to the whole company, how much of the entire Intuit business is going to come from the live franchise over time, aspirationally over the next 3 to 5 years? And would you ever consider breaking it out, a la Microsoft and Azure?
I may not remember all of your questions, but let me start at the top, and my buddy here to my left is gonna help out. First of all, I would take you back to what we talked about earlier today, which is our TAM is over 300 billion. In size. We have 5% penetration, and almost all of our TAM is non-consumption. However, the majority of everybody in our TAM is actually using a bookkeeper. They're using getting advice on payroll with an accountant or a payroll tax expert, and they're using accountants for tax, and they're using accountants and bookkeepers to be able to grow their business. That is what excites us about our TAM. The second is the largest unsaid problem for our customers is confidence, which is why the TAM is what it is and why the penetration is what it is. That's important context, and it's why when we declared our strategy in 5 bets 5 years ago, what we said was data and AI is core to driving growth, and that our second bet, which is around connecting people to experts, is the largest growth driver in context of really driving a penetration change in the TAM and the trajectory of it. Intuit Assist is, in our view, by far the largest catalyst to actually drive live growth. And the reason, if you just put yourself in the shoes of the customer, and what we are now observing with customers using Intuit Assist is at the moment of truth, you are engaging with someone, happens to be Intuit Assist, to help you make decisions. And there's only so far and a customer is willing to take it before they want to talk to a human being. And we believe that that will always be the case. What will change is the value that the human being needs to create, and two, how we use technology to actually make that expert efficient. So we believe it is the largest driver and catalyst, I should say, for live, because believe it or not, across TurboTax, across QuickBooks, and of course, across payroll, which you heard today, the awareness is extremely low. There's only so much advertising that you can do, which we'll continue to do, both digitally and on air, to make people aware of it. The best way to do it is in the moment of truth, which is where Intuit Assist comes in. The second thing I would say is the growth driver in TurboTax is going to be being able to drive TurboTax Live growth. We talked about what it grew last year in a very dynamic year. It grew 17%, and that will be the driver of the growth. And that's why Mark talked about the fact that we now look at keeping score of total IRS returns, our share of that in ARPC, and ARPC is the largest growth driver, and it's because of TurboTax Live. I think I got to, the other one was, would we ever report it separately? It's a great question. We'll take that into consideration because it may be one day, big enough, which we believe it will be, where we might want to consider breaking it out. But thank you for the question. We'll take it into consideration. Yes.
Siti Panigrai from Mizuho. And Sandeep, congratulations on your first Investor Day as CFO. Very nicely done. Sasan, my question, payment platform, we have seen that last few years grew very nicely. Now you are moving to more money movement platform. You can have now bill pay, even you offer checking account, money could flow within the ecosystem. So help us understand why customers should use your platform. How big is that opportunity, the whole money movement, the platform, and how is that a win-win for customer and Intuit? And as a follow-up, Sandeep, how much of the bill pay revenue opportunity backed into your guidance for this year?
Yep. I love the question. First of all, I'll start with everything for small businesses comes down to cash flow. By the way, small businesses, mid-market customers, and cash flow from the lens of a small business is really defined by, am I getting paid for the work that I did and how fast? Those that do things manually, on average, it takes more than 75 days to get paid. While at the same time, there's a lot of pressure on small businesses to make their payments on time. So I bring that up as context because cash flow and money management is the sort of the most important survival mode that small businesses are in. And after 10 years of investments, and particularly the acceleration in the last 5 years, we finally have a lot of the capabilities that a small business needs, from money going out and money coming in. And what we're most excited about is the possibilities of Intuit Assist. And I don't want to put everything on Intuit Assist, but remember, our entire strategy is Intuit Assist. When we declared our strategy to be an AI-driven expert platform and to ultimately create a future where the work is done for customers and they're always in control, with always a gateway to experts, is to actually be able to help them with automagically, would you like us to follow up on overdue invoices? You can get paid much faster if this is payment enabled. To be able to find people in the network that you heard Dave talk about earlier in the product experience, where you can easily find somebody in the network and be able to invoice them and then be able to pay that bill instantly. So all of these things are about making the experience drop dead easy, and what's in it for the customer is getting paid. What's great for the customers, especially with Intuit Assist, is we can project to their cash flow. We can project to them that, hey, by Friday, you're going to run out of money. You're not going to be able to pay your employees. These are 3 options that you have. Which option do you want? We'll act on it for you. Give you access to capital. All those capabilities that we've been building, we can now bring to life in a very magical way. And in a way that resonates with small businesses, because they're busy doing a lot of other things. Their life isn't the platform. However, the platform creates the life and the prosperity that they're seeking. So that's why we're so excited about the opportunities around digitizing all of money movement, whether it's money in, money out, and or across our network.
Yep. And the opportunity is significant. I mean, 80% of the B2B is still paper checks and cash. On bill pay, we are focused on driving customer delight, product adoption, repeat usage. And as you know, in the SaaS business, once you do that, you open up the aperture for downstream monetization. So that's our focus in the year 1. We don't expect it to be a meaningful part of our growth in the fiscal year, just given the size of the company. However, we are excited about the potential in the years ahead. And quite frankly, since our launch, we've been quite pleased as we look at the dashboards about customer adoption, which SKUs they're picking, how they're engaging with the product. It's new, it's been a few weeks, but we've been pleased so far. So we're excited about the path ahead.
Hey guys, wow, Brad Zelnick, Deutsche
We have
Bank.
mics that work.
These are good. These are good ones. Thank you so much for having us today. Amazing day, always is. Sasan, earlier in your presentation, when you laid out your 2030 new targets or goals that you had set, it's great to see that you're never satisfied, and Intuit as a company continues to drive to bolder and bolder aspirations. And one of the things that you had said was, I heard the word velocity many times, and I heard you speak to acceleration, and you then went and said, we see ourselves as a high double-digit growth company, which I take to mean both is aspirational, and I took to mean high teens, but even that would imply acceleration from where we are today. And I would just love to hear your perspective on the upside scenario. What's the algorithm? What are the levers that drive to an acceleration at this scale? And importantly, how do you do so without putting margin at risk?
Yeah, it's a great question. Let me team up with Sandeep on this. I'll go back to what Sandeep actually summarized at the end, which is if you just look at the long-term expectations that we have for each of the segments. In small business, we feel very confident that it's 15 to 20%. It's 200 billion of our TAM. The penetration is very low, and we have both an enormous opportunity to get new customers, because if you think about it, our algorithm is really easy. We get a new customer, we begin to penetrate with services because they need it to be able to run their business, and we get to grow with customers. And when we acquire a large customer in the mid-market, we get to digitize everything that they're doing and continue to grow with them. So that's 200 billion of our TAM. Penetration is very low, and we feel very well positioned with the assets that we have across MailChimp and QuickBooks, but particularly it's about data and AI. The one thing I would want this audience to take away from today, I've said it the last 5 years, we're a data and AI company. That's why we will be able to do the things that we've declared going forward. With that as context, then you look at tax. You heard Mark talk about it's a $30 billion TAM just focused on the assisted segment. We have the majority of the revenue share in do-it-yourself. Do-it-yourself, by the way, will always be important because there will always be new entrants there. But the opportunity to deliver 8 to 12% is squarely focused on assisted, both consumer and business tax. And then Credit Karma, it's a data platform. We have 136 million customers. We have the highest trust, 45 million plus that are monthly active, and they're on a frequency basis engaging 5 times a month. And customers trust us, and our penetration is very low across most of the verticals. Credit cards and personal loans, which is the longest living verticals, is only 8%. And so I bring that up just to say that's what gives us confidence in the 20 to 25%. And you add all of that up, we believe we can accelerate, the company's growth. What's not in any of those algorithms is a lot of what hopefully you saw today, which is there's an incredible consumer small business ecosystem network effect that we are creating. You heard Mark talk about what's possible across TurboTax, Credit Karma, and QuickBooks with business tax. You heard Ken talk about what's possible across Credit Karma and TurboTax. You heard Rania talk about what's possible across MailChimp and QuickBooks to create this one platform for small businesses to fuel their growth. These are all consumer small business ecosystem network effects that we are creating that's been a decade in the working. And those are the things that give us confidence when we think about the long-term growth of the company and being able to accelerate it over time.
Was there a question on the margin aspect as well?
Oh, sorry.
Yeah.
I did not intentionally not answer that.
Yeah.
The answer is yes, but go ahead.
So first and foremost, as Sasan mentioned, the 5 big bets are the accelerants, right? Bet 1, Intuit Assist. Bet 2, Assisted Live Options. Bet 3, Better Money Decisions. Bet 4, MailChimp. Bet 5, Mid-Market. As we are structured as a platform company that builds capabilities across the company, that gives us an inherent operating leverage. The live offering, we built it once for TurboTax. We learn, we iterate, and we scale it across the rest part of the company. So there's inherent unit economics and operating leverage built in. But as we look at our business and the opportunity to scale, there are a lot of what I would call expense synergies between our different business units, and our structure of having what we call internally the ecosystem approach across tech, customer success, and the go-to-market teams is one of the key unlocks that gives us confidence in our principle 2 to continue to scale operating income faster than revenue over time.
If I could just say one other thing to build on Sandeep's point, thank you for catching the margin question.
I didn't want to leave him hanging.
What's that?
I didn't want to leave him hanging.
This is one of the wonderful things about our leadership team in mobility. A lot of our accelerated innovation across the company, a lot of our margin expansion is coming from all the work that Mariana and Mark did in their previous roles. If you think about a lot of what you heard today around technology and our platform was all led by Mariana and her team. A lot of what's fueling what we're doing across Live was actually led by Mark and his customer success role. And now being in the GM role allows us to actually accelerate what's possible across the platform, which leads to margin expansion. So I just wanted to add that element. Please.
Hey, thank you, guys. Kash Rangan at Goldman Sachs. It's tough to go after Zelnick because he makes you think really, really hard. So, Sandeep, typically incoming new CFOs temper and lower guidance, and you didn't do that. So you must be a former Wall Street guy, clearly understands investors and analysts. And
I've been here 8 years. I see the opportunities, and we have the clear strategies to win.
That's great.
That's the answer.
Love to see that. Love to see that conviction.
Absolutely.
So, San, you talked about AI before that term even existed on Wall Street, I think 5 years back or so. How important is AI to when you look at accelerating revenue growth? Part of it is going to come from unit growth and ARPC. How do you think Gen AI is going to play out? Is it going to open up the TAM in terms of new units, new forms of consumption, or are we just going to be driving more ARPC? That's one thing. And second is, very quickly, since you have a feel for the pulse of the small business and consumer, what is your take on the economy?
Yeah. So, listen, I'll start with we have incredible conviction around AI. And our conviction is backed by where we've put our investments in the last 5 years, and we're continuing to accelerate. We truly believe that it will reshape every industry across the globe. And I would tell you that I don't think any of us have actually seen what's yet possible with AI. And I want to focus on AI because Gen AI is a variation of AI, a very important one. And we believe it is our unlock, which is why we declared data and AI core to our strategy 5 years ago, to be able to unlock penetration of our TAM. We believe new customer growth and the adoption, a breakthrough adoption of services will be enabled by all of our investments in data and AI, and particularly Gen AI, because what's wonderful about Gen AI is we're able to do things in a personalized way, in a humanized way, at the moment of truth when we're conversing with a customer, because I'm using your data and our LLMs to be able to provide you what you need exactly when you need it. You know, small businesses are not interested in, and consumers, in generic information. They want to know, what do I need to do as a plumber to grow my business and what's going on with my cash flow, not the cash flow of 10 other plumbers around me. And so we believe it's an unlock for both, which is why, again, it was core to what we declared 5 years ago. In terms of your question around the economy, I mean, I will just, perhaps answer the question with some facts. First of all, across our small business base, what we see is small businesses have 90% of the cash reserves this year compared to this time last year. So their cash reserves are lower, but they are much stronger as a community than they were 2 years ago, 3 years ago. So this environment is impacting them, but they are healthier, more robust than they were in tough times in the past. Now, you click down on that, we see areas that really are struggling, like advertising, real estate, those that provide loans. But in aggregate, they are fighters, and they are actually in general, quite healthy in this environment. And I would say on the consumer front, we've seen credit scores compared to last March, they're down about 13 points. Credit cards are up the balances are up about 30%. And the balances that are up the most is Gen Z. Their balances are up 45%. Now, the job market is strong. So these folks all have jobs, but there's clearly a strain in the environment based on inflation. So that's the net, more robust consumers and small businesses than they were pre-COVID, but the environment is having an impact on them.
And Cash, one of the things we're watching closely is the restart of the student loan payments on October 1. That's a higher beta. Sasan mentioned the higher balance. You add in the the interest rates have doubled as well. So that's one of the areas that leading to us taking a prudent approach in our guidance to fiscal 24, just given that we believe the consumer could be under increased pressure.
All right, hands up high so I can get a flavor. Okay, great.
Thanks. Kirk Materne with Evercore ISI. Yes, Sasan, when I think about what you all are doing with Live and AI, it makes me wonder about the potential impact on your gross retention over time, right? As a small business provider, you obviously face the fact that a lot of businesses will fail. But you're now putting in place products that allow them to go higher with you or have multiple touch points with you, and both on the consumer and the small business side. And I was just wondering how you all contemplate that in sort of your long-term growth dynamics. I realize the net new customers are still the bigger prize, but obviously holding on to customers is a huge lever for you, both from a revenue growth and a margin perspective. So I was just kind of curious what you've seen thus far and what you're hoping to see perhaps going forward.
Yeah, well, you all are asking amazing questions. This is why we have set a goal for ourselves that really measures the impact of our mission, which is to power prosperity around the world. And we've set a goal for ourselves that any small business that's on our platform, we want them to be 20 points more successful than those that are not on our platform. And by the way, we're already at 19 points. And we weren't at 19 points 5 years ago, which means that over time, our retention generally is quite high. It doesn't mean we don't want to increase our retention, but our retention is at 90% plus when you take into account small businesses that go out of business. So retention is important, but our biggest opportunity is actually to help drive economic growth by helping more businesses survive on our platform. So we've improved dramatically. We don't contemplate that into our short-term guidance or long-term expectations. It's more, but it will help. It will help and contribute to our growth. But we view it as really economic growth, because the less businesses go out of business on our platform, the better. And it actually goes viral, because businesses tell other businesses to use our platform because they're more successful on it. And so that's the way we think about the flywheel effect that it creates. Yes, up here, and then I'll come back to you.
Thank you so much. Mark Murphy with JP Morgan. Sasan, the push-up market is quite exciting, the opportunity. What do you feel that you have to architect or instrument into the product, I mean, in particularly QuickBooks Online, to go out and attack that opportunity for businesses up to 100 employees, but also over 100 employees? Because it feels like at some level, and we can see some of what you're building in around onboarding, et cetera, at some level, those businesses may want segment reporting, they may want intercompany transactions, they may be dealing with subsidiaries and entities, they may want budgeting and planning, they might want more detailed audit trails, et cetera. So can you help us understand maybe what is the preliminary step and what you need, and then in the very long run, how ambitious are you to kind of take on some of that feels like a bit of a heavy lift?
Yeah, thank you for the question. Let me say a couple of things, and I'll do that for the effect of oversimplification, but it's the reality of how we view it. Our biggest opportunity to serve mid-market customers, as we've defined it today, which is between 10 to 100 employees, is really about go-to-market. It's really continuing to improve our both marketing approach and how we are building out our sales team and getting the right skills, which is still, by the way, inside sales. But really, our product, generally speaking, it doesn't mean it's perfect. Our platform can deliver for the mid-market between 10 to 100 employees. That doesn't mean perfection, but generally we have what we need. There's still more work to be done. So think about what we've declared, which is 10 to 100, as we got to get far better at our go-to-market motions, and that's where we are making our investments. I would say above 100, let me first start answering your question with our ambitions. We declared 10 to 100 as a starting point. We are not going to stop at 100. In fact, we believe that getting to a place where we can serve those with thousands of employees is really our sweet spot, and that's where we can be disruptive, and that's where the money is. That becomes both go-to-market and product. We are not yet positioned to be able to have the product that we need to serve 100 plus, and so that's going to require both. It's, by the way, on our roadmap to be able to go beyond 100, but the simple way to think about it is 10 to 100 is go-to-market, 100 plus, there are capabilities that you actually mentioned, a number of them that we need to build out on our platform. Our platform is built to scale. So it's not a scale issue, it's actually building out a lot of the functionality that you were just asking about. So we are very ambitious in mid-market. And I know I said this 3 years ago, and I'm saying it 3 years later, I don't even think we've made a dent yet in mid-market. And it's not for anything other than just the opportunity is massive, and so we're excited about it. Hence why it's one of our 5 big bets. Yeah, please. And while you're asking your question, can you all raise your hands again just so I can get a view for, okay, great. All right.
Hey, Sasan, Brent Thill with Jefferies. You mentioned early up front the risk with international. It's never crossed double digits in my, I guess, our numbers as a % of revenue. Maybe we're asking too much about it or trying to drill in too much, but you didn't really spend much time talking about it in the discussion you have in the past. Does it matter? Is the opportunity just so big here we shouldn't even ask about it? Or how do you think about it in the context of the overall business?
Yeah, thank you for your question. First of all, you all have been rightfully so asking about it because we teed it up as a huge opportunity, and we've been investing in international. And so please keep asking about it because it's important to us. So that's number one. And number two is the opportunity in the US is huge, but we believe the opportunity international is essential as we think about the company. If we forward the clock and it's 5 years from now, 10 years from now, we must have made a lot more progress in international. So it's essential to our future. And therefore, a lot of the investments that we are making, everything that you heard today, other than TurboTax and Credit Karma, because our focus is really small business, is all global investments. They are not US-oriented investments. And in fact, I'm sure you heard Rania talk about the fact that what we are doing, building out all the capabilities across MailChimp, and then building CRM native tools within QuickBooks. Our intent over time is to have that available in 30 countries because the tip of the spear going forward is MailChimp. So we still see it as an enormous opportunity. We don't have to rely on it in the several years ahead of us or even in the next 5 years, but that doesn't mean it doesn't require focus because I think 10 years from now, we want to look back and have international be a far bigger part of the company than it is today. And I think it's necessary to fulfill our mission And the way our platform is being built, it's being built as a global platform. So keep asking about it. We teed it up in such a way years ago that really put you in a place to ask about it. And so keep asking about it, because our conviction is consistent with where it was 5 years ago. Yes, and I'll come to you.
Yes, thank you. Stefan Slorinsky from BNP Paribas. Thanks again for the presentations today. Just want to ask the M&A question. So we've seen today how you've outlined how you've combined all of this organic R&D innovation with those two big strategic moves you made for Credit Karma and MailChimp. Just wondering, should we expect more of those strategic moves to kind of accelerate what you're investing in organically, or the focus beyond that R&D investment? Thank you.
Two things I would say. One is our M&A principles, don't change for us. It's really about time to market. It's about really bolstering our platform as a relative comparison to the velocity of internal investing. Because for us, what's most important is the data. At the end of the day, when we think about acquisitions, is where we believe it can significantly bolster our data platform on behalf of our customers, because that's where AI comes in. That's the first thing I would say. The second thing I would say is we really feel great about how we are positioned with the two big acquisitions that we made with Credit Karma and MailChimp. These were two huge capabilities, two number ones that we bought that really allow us now to take those benefits and deliver it for customers and put the power in our customer's hand. Doesn't mean we won't think about acquisitions in the future. We always think about tech tuck-ins and so on. But these were two really important acquisitions to position the company to where we are today. And I'll just end with the following. It's the data. The data that we have now with MailChimp and Credit Karma on behalf of our customers allow us to do a lot of the things that you saw upstairs, and particularly with Intuit Assist. And we feel very well positioned to do just that.
And one thing you could also hold us accountable for is the high bar we have for M&A in terms of the returns we expect from this acquisition. So.
All right, great. Jackson Ader at MoffettNathanson. So I understand taking the prudent approach on kind of maybe some softness in the consumer here in 24. But if we drill into Credit Karma specifically, there's just such a wide gulf between plus or minus 3% and 20 to 25. So I'm just curious, what kind of environment would it take to grow 20 to 25%? Is that like everything hitting perfectly? Is that normal? How do we get there?
Yeah, thank you for the question. It is not all stars aligning to hit 20 to 25%. It is being in an economic environment that doesn't have the uncertainty of the interest rate environment that we are facing today. That's really, I would say, the biggest X factor. And remember, this was a business, when we acquired it, that was growing north of 20%. It propelled to 38% growth or 37% growth and then 58% growth because there was an enormous economic tailwind. When we think about the innovations and the investments that we've made, one is around data, one is around Lightbox, which now allows us to deliver personalized experiences. And when you think about the context of what both Ryan and Joe showed upstairs, we have reimagined the entire app. And in context of Intuit Assist, we can now deliver at moments of truth the right products and services that customers would need in ways that we couldn't do it before. That, coupled with the integration with TurboTax, we feel that in a normal economic environment, this is a 20 to 25% growth business. I'll end with where I started. We don't have to have all stars aligning for that business or any of our long-term expectations that we talk about. This is what we believe can be a long-term expectation in a normal economic environment. Would you add anything, Sandeep?
The only thing I would add is just a little bit more in terms of what we're seeing in this environment to address your question, Jackson. We're seeing, because a lot of people giving personal loans on our platform are off balance sheet. They can move that paper at par because the rates are moving so quickly. So we need that market to normalize. Insurance is harder to scale when inflation is high and you're seeing all the insurance pull back in terms of new underwriting. Credit cards, we have 8% penetration, but when you think the consumer might be under pressure, you're not leaning in as much. So to just double down on Sasan's point, we don't need an expansionary environment. We need a stable environment leaning towards expansionary.
Probably have time for a couple more questions, so hopefully we'll be able to get to everybody. Please.
Wonderful. Thanks so much. Brad Sills from Bayvay Securities. Wanted to ask a question around TurboTax, full service, and QuickBooks. As you go into these assisted categories more and more, I think in the past you've said TurboTax Live has a similar variable margin or better than TurboTax Online. So you're talking about a business with services and people involved having, the same or better margin than a software business. So can you get there for TurboTax full service, QuickBooks, assisted as you move into these categories? How did you get there for Live, and how can you apply those same learnings to these other assisted categories?
Yeah, thank you for the question. So this is, as you saw hopefully upstairs, this is entirely tech-led, and it's data-led and AI-led. And so what that means is a couple of things. When we talk about connecting people to experts, experts doesn't always mean a human expert. It can be Intuit Assist, which is also fueling the efficiency and the productivity of our experts, which leads to what I led with, and that is this is all technology-led. And so when you think about what our experts are experiencing as we sit here today on the platform, whether it's a small business customer where, by the way, the data intake is more than 10x someone that just has to do their taxes, we bring that data in and automatically it actually goes into the platform so that the expert doesn't have to do a lot of the manual entry. In essence, we are reducing 70–80% of all the manual entry for the expert. Secondarily, we actually queue up for the expert the areas they should be exploring and the questions that they should be asking. And all the work that they do is automatically captured for them so that if they need to do follow-ups, they don't have to do the work. What I just shared is significant, right? You don't have to do manual entry on the data. You leverage the smarts of our platform that the expert uses. It allows us to, one, do what Mark talked about, which is we can do full service now for a large number of customers within an hour. That is not only a penetration play and an ARPC play, but that's an expert that's very, very efficient. So we have enough data now, 5 years in, both across TurboTax and across QuickBooks Live, to feel very good about our the variable margins, and ultimately we manage margins at the company level, and so we feel very good. We felt great about it 3 to 4 years ago. We have so much proof now in terms of what's possible, which is, by the way, what allows us to be disruptive, because we're doing this at scale, and it's very hard to copy all the data and AI capabilities that we've invested in. Yes, and then we'll come to you as the last question.
No pressure.
No. We have one more after his last question.
I know. Hey, Ray Malencha from Barclays. The one subject that comes up every year again is payment. And I remember I was upstairs last year for the payment, and the message was now we're ready for it, and we solved some of the problems. Now this year we're talking again about payment, being ready for it. Can you kind of get us on the journey where we are there in terms of being ready, being finally ready? What are we seeing there? Thank you.
Yes, absolutely. Just so Sandeep doesn't feel lonely, I'm going to let him answer the question.
Absolutely. It's a journey, quite frankly. And let me just take you through the journey. When I joined 8 years ago, believe it or not, I served as the chief risk officer of a payments business for 6 months. That's where we were. We were working with external parties to build risk models to take our underwriting approval rates from way below where they are today. They were in the 60s or maybe low 70s to where they're today, which is order of magnitude higher. At that point, we were more ready for payments. Then we built the money in capabilities, and we added new features, functionalities. We became even more ready. Now we are adding money out capabilities. So I would share that it's a continuum, it's a journey. So hold us accountable to what we're delivering. As Sasan shared, 25% payment volume growth online, 18% growth overall. Those are all pretty impressive metrics when you compare across peers in the fintech space. Similarly, we would expect when you're here 3 years, we'll be even more ready for payments, and it'll just be a much more higher and complex and further down that spectrum. So it's a journey is how I address your question.
All right, one other question.
There was a gentleman in the back also waiting for a while.
Yes, the gentleman in the back, and then if you can raise your hand, please. Okay,
thanks.
Right here. Perfect.
It's Scott Schneeberger with Oppenheimer. Wanted to touch on TurboTax Live full service a little bit more. if we could just get a sense of what were some of the pain points this year? Is it growing at the pace volume-wise that you'd like to see, comparatively to what you saw of TurboTax Live original out of the gate? What were some of the pain points? What are you doing to fix it? And if you could touch upon maybe local speed through the interface and also marketing strategy. Thanks.
Yeah. Sorry, Scott, I can't see you if you were to stand up here. The lights are in the eyes, so my apologies, I couldn't see you. The couple of things in terms of what we've learned and what we are doing about it, and I'll bring Credit Karma into this picture. It's been about 3 years where we finally feel great about our lineup strategy and the experience within the Credit Karma platform. That's why last year it grew 6x. But I'll give you an example because you asked about pain points. Last year, only 20% of Credit Karma members that chose to do their taxes with TurboTax had a seamless login experience, which means I want to do my taxes or I want somebody to do my taxes. For 80% of customers, we would create this friction where they had to create an entire account and go through an entire process of getting signed up. Well, if you're an assisted customer, the first thing you're asked when you walk into somebody's firm or house to get your taxes done isn't, here, let me put up a piece of software for you to create an account. So now this year, going into this year, our hope is that more than 80% of customers, if you're a Credit Karma member and you say, I want you to do my taxes for me, or I want to do it myself, it'll be seamless account creation. That's huge. That's a massive fall off in the funnel. So that's just one example of an improvement in the overall experience with a lineup change that will be very specific for Credit Karma members that we believe will significantly contribute to TurboTax's growth this coming year, and particularly in the assisted segment. So that's one. The second one is full service. Last year, although we had product market fit in full service, we put a lot of things, what I would say friction points in front of customers to confirm, do you really want us to do it for you? Do you really want us to do it for you? Well, if you ask a customer enough times, do you really want us to do it for you? They'll decide, well, maybe not, I'll go somewhere else. But that was really intended to ensure that we were getting the right customers in the full service, but we took it too far. So this year, our full service experience is completely revamped with a lot of what you heard Mark talk about and also upstairs with Sarah and Lance, where it's both the combination of Intuit Assist that is bringing in their data automatically, getting them connected to the right expert, and all the Intuit Assist virtual expert platform capabilities that now an expert can use, where we can, for a majority of customers, get their taxes done within an hour. By the way, that is breakthrough. That is absolutely breakthrough. So that's the second area. The third area that I'll mention, and Mark touched on this, which is another huge breakthrough for us, is what we call local. As Mark talked about, a lot of customers that are in the assisted segment, there's a lot of churn in the assisted segment. They will go and Google, who's the nearest pro near me? Well, we never show up in that. And so that was a huge insight last year, where we've changed our approach, where 80% of the households in the US plus are within a 10-mile radius of our expert network. And this doesn't mean we're going to do things face-to-face. Actually, the majority of customers don't want face-to-face interaction. They just want to know the pro is local to them. So we're completely changing our marketing approach to how we raise awareness, but also how we show up locally, so that if you say, who's a pro near me, we'll actually show up, and then they can engage virtually, but they have the comfort of knowing you're 10 miles away from me. So those are I would say, the very big things that we learned last year, all of which we're evolving and executing this year. All right, you have the last question.
Last question. Dan Jester, Bank of Montreal. Thank you for fitting me in. So you've alluded to this a couple of times about QuickBooks Live, but I just want to be explicit about it. Do we have product market fit today? And as we think about the journey on the QuickBooks side relative to the TurboTax side on Live, how should we think about that playing out over the next couple of years? Thanks.
Yeah. So first of all, we do have product market fit today, inclusive of business tax. Two, I would tell you that it's been far harder to solve this problem for small businesses than it was for consumers. Why? Because when it's tax time, a consumer wants to get their taxes done. It's a fairly sort of clear outcome and set of benefits that the consumer wants. With the small business, we have had to learn a lot in the last several years. Some just want to come in and ask us to set them up on QuickBooks. Some want help with bookkeeping. Some, when they build a relationship, will say, by the way, why can't you just do my taxes for me? Well, we couldn't do that before. Now we can. And so it took us several years to really get to product market fit. It's a far harder problem to solve than it is for just directly consumer tax, which we like that. The harder a problem is to solve, the harder the problem is to scale digitally, the better it is in terms of just the advantage that we have in the marketplace. We feel very good that we have product market fit. And you actually saw one of the things that Mark talked about is 36% of QuickBooks customers automatically just want us to do their business taxes for them, but we never had product market fit before. So now it's all about go-to-market motion. How do we take this to market? Is it embedded in the lineup? Is it a separate lineup? We have a very strong point of view of what that should be, but really our biggest focus right now is our go-to-market motion. But we have reached product market fit, and we're excited about it. Would you add anything before I bring us to...
I'll just remind you of the data we shared in Mariana's presentation. It was around the PRS being about 8 points higher, the retention being about 11 points higher. So we actually have quantitative data that backs up the strategy that Sasan highlighted.
Excellent.